Good morning, friends. Welcome to the SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing for the day and the next few trading sessions. From price action perspective, post the positive opening yesterday, both frontline indices witnessed range-bound activity with Nifty and Bank Nifty ending the day on a relatively flat note. Decoding the asset price relationship from the macro perspective, post a fall from 107 to 105 levels, the US dollar index is consolidating around 105.5 and must be monitored closely going forward. Any move above 106 once again would lead to dollar index resuming its uptrend, else it could be in a sideways consolidation between 104.5 to 106.2 range. On the other hand, Brent crude has corrected to $80 a barrel, and that's definitely a positive for the Indian markets. S&P 500 in the past 8 sessions has witnessed a 7 to 8% rebound from the lower levels of 4,100 all the way towards 4,390 and is now approaching an important resistance zone around 4,420, which is also a crucial breakdown zone witnessed in the month of October. It could consolidate for a few days here, and beyond the levels of 4,430 we could witness a continuation of the up move towards the levels of 4,570 4,610 levels. India VIX closed 2% lower yesterday at levels of 11, and now it's important for VIX to sustain below the mark of 10.3 levels for further up move in Nifty. Also, one key level that we should be keeping on our radar is the level of 12.25 where the 200 DMA for VIX is placed. If India VIX moves above that, it means some resistance for Nifty could be seen at higher levels. Coming to index levels, after a gap up opening yesterday, Nifty traded relatively range bound for major part of the day, trading in a range of 60 points. Till the 20 EMA support zone, that is the levels of 19,350, 19,370 hold steady, the index can challenge its resistance zone of 19,525, 19,550, which is the 50% retracement of the entire down move, that is from the levels of 20,222 all the way towards levels of 18,837 levels. Positionally, if Nifty crosses and sustains above the levels of 19,580, 19,600 levels, fresh rally on the upside can be seen towards the levels of 19,730, 19,780 can be seen. Below the levels of 19,350, the index can witness profit booking up to the levels of 19,260 levels, followed by 19,170. From a weekly expiry perspective, looking at the OI data for the weekly series, significant put OI built up is seen at 19,400, 19,350 strikes, while on the call front, OI built up is seen from 19,400 all the way towards the 19,550 strikes. So hence, from an intraday expiry perspective, 19,365, 19,390 zone could act as an important support zone, while on the upside the first resistance could be seen closer towards levels of 19,470 followed by 19,520 levels on the upside. Looking at the built up in the 19,500 call options, the 19,520 540 zone could act as a key resistance from an intraday perspective. So overall range for the day for the index, that is Nifty spot, would be 19,370, 350 on the downside and 19,540 on the upside. If you see, the max pain currently is placed around the 19,400 mark. Coming to Bank Nifty, the 20-day EMA zone, that is the levels of 43,450, 43,500 is likely to be the immediate support, and sustaining above this, the index can move towards the levels of 43,900, which is the crucial support below which the Bank Nifty witnessed a breakdown in October. So above the level of 43,900, further short covering rally up to the levels of 44,200 zone can be witnessed, which is also the 50% retracement of the entire down move, that is from 46,300 to 42,105. So on the support side, if there is a correction below the level of 43,450, index can test the levels of 43,100 levels on the downside. For the next weekly series, significant open interest built up is seen in the 43,500 puts, and on the upside it is seen in the 44,000 calls, implying a near term range of 43,400 and 43,150, 43,200 levels for the bank index. Now let's see some sectors and stocks that are looking positive, keeping the short-term perspective in mind. As we highlighted yesterday, pharma stocks such as Sun Pharma, Cipla and Oro Pharma have performed well and continue to look strong on the charts, while some of the other pharma stocks also such as Ipca, Abbott, Alkem, Granules, Glenmark and Zydus have shown good improvements on the chart. With correction in crude oil prices, tire stocks such as Apollo Tires saw good build up on the long side and its results also continue to do well. From the broader market, bullish setup was observed in OFFS, TVS Motors, Info Edge, MFSL, Ultratech, Zomato and HL have formed favorable chart structures with supporting data on the derivative front. Coming to the FI DI data, on the FI front, FI sold to the tune of 80 crores while DI is bought to the tune of 520 crores in the cash market. FI's long short ratio for index futures is around 19-20%, which is weaker, and they have added around 5,000 index short contracts in index futures. In the stock futures side, FI sold to the tune of 12,180 contracts, while on the options front, FI has added 75,200 call contracts and bought almost 1.5 lakh contracts of put options. Just to summarize, basis the FI data, we feel key support level for Nifty being the levels of 19,360, 19,380 levels, and resistance on the upside being at 19,520, 19,540 levels. While for Bank Nifty, key support would be the 20 EMA zone of 43,400, 43,450, and resistance would be seen at 43,900 followed by 44,200 mark. Above 44,200, Bank Nifty can witness further buying momentum all the way towards 44,500. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.